All right, what's up, everybody? Welcome in. It's been a hot minute. Potential spam over here calling me right as I get started, of course. Guys, welcome in. We have a banger for you. It's Josh and SCHMITTY, and we're here for our first 2024 Market Power Hour. It's been months. I can't remember how long it's been. It's our first Market Power Hour on Twitter, streamed live on Twitter, and also on Twitch as well. So anyway, thank y'all for being here. Josh, SCHMITTY, if you guys want to give yourself a little introduction, and just FYI, chat says they're horny. So go ahead.
We're giving the people what they want, man. I can't tell you how many people have messaged me. I don't know when the last one we did was. It's got to, like you said, had to have been months, but people love the show. We have fans. We have dedicated, devoted fans. So this is for them, you know?
Yeah, someone actually got my logo tattooed on them.
Really?
No, that would be cool.
I mean,
Bro,
it's
what?
believable. People be crazy like that.
They do be.
We're supposed to intro ourselves.
Who are
okay,
you,
okay.
Josh?
I'll go first. I'll take the lead here. Okay, I'm Josh, Carpe Noctom. Been trading for over a decade. I like the cloud. That's about it.
Cloud guy.
It's my turn.
Your turn, carrot guy.
All right.
SCHMITTY, I'll introduce SCHMITTY. He's usually bearish. He loves Wyckoff. Sorry, go ahead.
That's about it.
Nailed it. Not today.
So apologies. I'm like on the tail end of a cold, so if you hear me like banging around a Ricola in my mouth, that's why. But yeah, good intro.
I like how whenever you speak, it just shows like the carrot. It just shows your little avatar.
Yeah, I mean, one day I'll do I'll start my OnlyFans and dox myself or whatever. But
Show your feet pic.
I've started to care less and less about that over time. To be honest with you.
Sure.
Show my feet, carrot. Is that what you said?
You can make your like only feet pictures your avatar, and then it pops up each time.
Yeah.
Cross
Yeah, actually, have like IRL. I have good looking feet. Not even gonna lie.
Okay. Yeah.
All right, I think we should start with the charts.
No. Let him cook. Oh, let's see.
Jack, I think is the most not bullish. I won't say bearish, but I think he should go first.
Okay.
Yeah.
All right.
Because I'm most interested in what he has to say.
Y'all are gonna bring it home. I know. All right. Yeah. So what's up, guys? I guess I'll kick things off here. Let me kind of get my stuff organized over here, and rather than Josh's beautiful face, I'm gonna throw up. Did that work? Yes, it did. Okay. All right, guys. So I am a part-time occasional crypto chart streamer. If this is your first time to see, I don't know what the deal is. I think the Twitter algorithm took a nice chill pill, and all of a sudden I started getting a bunch of new followers out of the blue, and not because I was posting. This was when I did like a 3-week sabbatical away from all social media, and all of a sudden people just started pouring in. So I don't know what the deal is, but welcome. Glad you're here. I don't post a whole lot. If you're on Twitch right now, don't give me a sub. You're not going to get your money's worth. So, I stream just every so often. And these guys really talked me into streaming today. So this was, in the past, it might have been the other way around, me really pushing to get new content out. But today was these guys. These guys are who I'm interested in hearing from. But, I'll go ahead and kind of give you my 2 cents and we'll go from there. All right. So here's the price action for Bitcoin. This is a 6-hour chart, not for any reason in particular. Here's 4-hour, whatever. There's something that I've had my eye on for a hot minute. So we're going to go to what I've been watching and then like what's actually transpired. But I'm not the type to go and like delete my old tweets and stuff when things don't work out. I think there's like a lesson to be learned along the way. So this particular chart, this setup that I was watching for was a distributionary type setup. And there was a lot of things at play for here. It wasn't just because, there's a fractal. I think there's a lot of guys on Twitter who don't really hear the whole story and they kind of like roll their eyes at stuff. It's really nothing to do with a fractal. It had a lot more to do with the fact that 48K for me was a massive target for a long, long time. And not just because of the price action leading up to the moments that it right before the 48K, but for the weeks leading up to it, this is something we've kept our eye on. One of my favorite things to keep in mind, or as far as like, you know, pullback targets, etc., is to look for the 61.8 retrace. And if we go from the bear market lows to bull market high, the 61.8 retrace was smack dab right here on the 48. Also, this was a very key level for the bears. If anybody had shorts, then they were likely setting a stop loss up at this level. And I was really happy to play, you know, the majority of this move, expecting for price to come all the way back to 48K. So that kind of brings you, if you weren't here for all this conversation, this kind of brings you up to speed to today. So a lot of my expectations were that price would come to 48K, and I actually had a bunch of limit sales at 48K. So the only Bitcoin I've really sold as far as trading goes, you know, like my bearishness goes, is at 48K. So 48K has been the exit for some of the positions that I entered, you know, at the breakout of this falling wedge, etc. So that kind of brings us up to where we are today. Now let's go to the lower time frame and take a look at what's happening right now. So to me, what I was expecting was after this upthrust, after distribution, or during distribution rather, after this upthrust and some sort of rally off the lows, I really expected some sort of failed breakout up at this level right here, up to this kind of like 44 to 45-ish level. And that's based off, you know, just horizontal resistance and that kind of thing. At the same time, I was also expecting a sort of alt season, because that's historically what happens when this fractal, when this distribution, when this event comes to play. This just seems to be the way money rotates through the crypto ecosystem. We see stuff go from Bitcoin into alts, and then everything just goes down only. But we really didn't see that. Even today, if you look at like Ethereum or Litecoin or whatever, you know, pick your alt, none of them have really outperformed Bitcoin, popped off, whatever. If you look at an alt Bitcoin chart, it's kind of just a nothing burger, you know.
Wait, say that again. Say that again for the people in the back.
For the people in the back
who ask me, and they think their coin is the coin. Their bags are the bags. Their secret pile of junk is actually not pyrite, but a pile of treasure. Sorry, go ahead.
But that's like the norm. I mean, I have these random alts I just like to flip through. I just pulled up Hook and Flow and whatever, like just stuff that doesn't matter. It's nothing. But what I'm trying to illustrate here is that it's across the board. It's not just Ethereum. It's not just Litecoin. It's not like what we're seeing is happening across the board. Bitcoin is moving, alts are not. So that's the first sort of like divergence from what I expected right here. So that's the first like X over this particular thing playing out. The second is this big impulsive move to the upside. So we're at the point where like this is really going to be erased from the chalkboard. I want to leave it here because I think it's good reference material, but it's not really what I'm most focused on at the time. I still think this, if I go to a clean chart where there's not a bunch of lines and stuff, and I throw on one of my favorite things to look at, the yearly pivot, every halving year, we've actually come back and hit the yearly pivot at some point before moving on. So, and this is like something I've gone back and like back tested, but you know, whether it was the last halving or even the one before, price likes to do a thing where it makes a big explosive move, comes back. So as far as, you know, I get a lot of DMs, like several today and yesterday, about, hey, do you still think there's a chance we go back to 36? And I think the answer is yes. Now, how we get from what is transpiring here back to that, like how that comes about, I can't tell you. My IQ is way too low for that. But if it's just kind of the general question of, hey, do we think price will find its way back to 36 at some point during the calendar year 2024? I think yes. Like as far as a betting and odds and stuff go, I think there's a really strong chance that happens. So distribution aside, if we just kind of like erase everything and we just take a look at what the price action is right now, and I'm wrapping up my portion so that these guys can do theirs. There's two things that stand out to me. Number one is as far as price action goes. Number one is there's a sort of megaphone pattern. What do they call it? A broadening channel, whatever. And this is not anything that just makes me leap up and enter a position one way or another, right? This just shows like we're in a trade range. This is just another sort of trade range, and we find ourselves in the, you know, upper third of it. And also the only reason I like stuff like this is it gives you kind of a nice little eyeball, like, oh, okay, what could this be? And I see that this upper band could be about 50,000. Nice round number. Could 50K be where this kind of takes a breather? Yeah, that makes sense. It kind of just, it passes the smell test, the logic test. The other thing that I'm keeping an eye on is the range itself. So if this is, and SCHMITTY will go into this in more detail about reaccumulation, and he has a lot of nice visuals. I'm not going to steal his thunder on that. But if this does go on to form reaccumulation, one thing I would love to see is some sort of consolidation before the next big move, some sort of sign of strength. And it doesn't always happen, given. But as far as being right on the heels of an up-only-esque move over the last few days, man, the hardest thing to trade is betting on more up only, of more to the upside, rather than saying, hey, a good way to be reasonable about this is to look for some sort of cooling off period and consolidation. And the big thing pointing to me that we need some consolidation is some of the momentum indicators. I mean, take your pick. There's a million of them, but like right here is just RSI. If I have RSI showing, you can see that we're pretty blown out. This is the 4 hour. We're pretty blown out just about every way you can look at it. And these have been really nice to hit, like, hey, take profit, except for here, except for the start of the new, you know, this was right on the heels of the last kind of accumulation range and the breakout on, and this moved us on to the next thing. And so place your bets on what you think's happening. Are we, you know, this guy, or are we one of these? So there's that. And then if I go to even the like higher time frames, the 6 hours pretty blown out. The 12 hour is getting there, not quite as bad as we've seen it, but it's definitely getting there. And the same story with the daily. So just historically speaking, you know, these are often not great times to enter big sweaty margin positions. You usually want to be the guy buying kind of closer to the bottom. But I think that kind of wraps up my thoughts on the matter right now. Any questions from you guys?
I was expecting to be more bearish. I wasn't persuaded. That's all I'm saying.
Yeah.
I'll agree that we can't probably keep going straight up forever, and we're probably going to need to consolidate at some point. I think like you said, the 50K level is going to be very interesting from a psychological resistance point of view.
I think probably it would make a lot of sense. I'm trying to be like very genuinely like fair for the bear and the bull case. I think it would be very interesting to see something like this, you know, just like what neither party really is expecting, the bulls or the bears. But we blew out all the stops down here. You know, could we be going to blow out all the stops up here just to come back, even if it only comes back like halfway, you know, before moving on? I don't know. But that would be kind of the bear case to watch out for. I think the kind of thing you'd want to see to like confirm that we're heading that direction is maybe a little bit more of an impulse up and then a close back below. Basically the inverse of the spring we just saw. But we don't see that. Like I'm trying to kind of game theory out what could be and like how things might behave into the future. So anyway, I've hogged the mic. Who wants to go next?
SCHMITTY, you want to go next? I'm still trying to put stuff together. Sorry.
Yeah.
Good.
Let me
all right, yeah, there you go, SCHMITTY.
Share. Nope, not that.
I'm gonna make my little.
Here comes the
camera
bull
go.
parade.
Here
Get
we
ready
go.
to just get washed over you. You know,
Buckle
up.
like a gentle
So
Irish
just
springing waterfall.
fair warning, I'm so bullish it hurts. All right, so I'm gonna go on the other side of the coin, no pun intended. Here, and I'm gonna pose the other side of the Wyckoff argument, which is that this has all to me. This is such a clean reaccumulation trading range. I've waited for this sort of setup for years. They don't happen often. And when they do, it's usually paired with some sort of narrative. I'm not a big fundamentals trader, but I do like when things line up with the narrative, right? So the narrative here is that we've got this ETF, we've got all this contracting supply with the halving coming up, and all of this stuff sort of lines up for an irrational run for like a parabolic blow off of some kind. So before I go into that, I'll break down why I think this is a reaccumulation trading range and why. Oh, wrong thing. Okay. So when we look at, dude, this zoom menu is like right over my tools, and I can't. How do I move this? You can't see what I'm dealing with right now. Okay, I can move that. Okay.
No, we don't even see it.
Yeah, so it's like it doesn't matter. So here we are. So when we look at trading ranges like this, a lot of times when we see huge volume sell-offs like this can often disguise reaccumulation trading ranges in the form of a distribution. And one of the telltale signs that differentiates this from a distribution is the way in which volume does not expand through the lows. Okay. Not only that, but we don't see spread expanding as well. So we see high spread, of course, right? High volume. But as it approaches the low and the subsequent breach of the trading range, volume is nowhere to be seen and the spread contracts. It sits here and consolidates. And then what do we see here is massive spread back into the trading range. Okay. Now that alone isn't enough to say, okay, this is definitively, reaccumulation. Context is the most important thing here. But what we do see here is that there's a lot of volume pushing the market through the low and less volume making a higher result. So this is, and why coffee in terms, this is considered effort versus result sort of situation, right? High effort, low result. Effort would be the volume, result would be the spread. This is medium effort, large result, right? Now that alone, again, is not enough to say, okay, this is where I feel confident that this is distribution. So I'm going to take you to an example where this was very, very, very similar in structure to something that happened in the past. So when we look over here, if we go back in time here, okay, the market structure is almost identical, but the context is totally different. We see humongous volume accelerating through the low, and we see contracting volume on the rally up. Not only that, but we see continuous widespread through the low. Now, keep this image on. Can I copy this? I can't copy this, right? I can take a snapshot and then I'll paste it. Can I do that?
I think so.
Yeah, you can also copy the candles, but that works. Yeah.
Oh, here we go. Nice. Trading views come a long way. Okay, cool. So when we look at this, right, this had me tripped up. So I initially broke my vow of silence on Twitter for the first time since October. And I said, hey, this looks a lot like, this market structure looks a lot like this. And on a dime, I changed my mind because of how this was not breaking the lows. The major difference between these two things is in the volume and in the market structure. What we see here is, so I don't know if this is a Wyckofian term, but it's something that I've kind of like come up with. I call it the POI, the point of interest. And usually in trading ranges, there's an overhanging resistance zone that the market just kind of really struggles to get through. Oftentimes it's impulsively broken and then impulsively rejected. We see this over and over again. In our prior range, we saw that, and we saw the market trying to break it and making, if we were to fast forward this, we saw higher highs that were trying to grind through this resistance and it couldn't. We saw the opposite here. We saw no rejections of this overhanging resistance, and we saw consolidation through here. This was increasing volatility. This is decreasing volatility here. So someone's asking about last point of supply. Dead giveaway that this isn't last point of supply is I love objective tools like Bollinger Bands. We do not see increasing volatility throughout this little chunk of price action here. And as soon as it breaks north and it gets, this idea that I've talked about called the Bollinger Band attachment, or John Bollinger calls it riding the bands. When we have this prolonged consolidation on our Bollinger Bands, and we see a strong move up that attaches to the upper band, this is considered a breakout. And you can see this well before it actually breaks through a zone of resistance. So, oh my God, my mouse is freaking out. So all that to say, when you're talking about the market through the lens of Wyckoff theory, we talk about it through this idea of the composite operator. And that's just a literary device to kind of like, it's the net total effort of all large players. Rather than saying, what's BlackRock doing? What's, so-and-so doing, blah, blah, blah. We say, well, what is the market doing? And we view them all as one collective entity. And at this stage of our reaccumulation trading range, we see strong, it's called sponsorship. And what that means is that these aren't retail investors that are pushing the market up. The whole point of the reaccumulation trading range was so that large players, the composite operators, accumulate positions. They accumulate a massive position over time. They shake out retail, and then the conclusive move out of the trading range is a strong, unrelenting move through the upside. That's exactly what we see. We see medium effort at best, very, very strong result. There's not even a single retest of any of this stuff. And it's tempting to say, okay, well, what goes up must come down. But the Bollinger Bands say this is a totally healthy move. There's no overbought signal. It's riding the bands. It's not like blasting through the upper band. I can show you some examples of that. Like here, for example, it's not doing, get out of here. It's not doing this, right? Where you see this massive wick up to the upside and it gets rejected, or something like this. It's just chilling, man. It's riding the bands and it's just carrying the wave with it. Now, when we look at targets for this thing, there's the formal ways to do point and figure charts. I'm too lazy to learn how to do it. The easiest way I've learned to measure targets is you take the extremes from the high to low, and then you project it to the upper boundary of the trading range. This one's kind of a weird upper boundary because we see, 1, 2, 3. I would argue this is the true upper boundary, and then this is like a really important level. So just roughly projecting it, you measure this, you get 10.6K, and you just project it either from here or from the other level I outlined, right? And we get roughly 55 to 57K is like the rough estimate here. And when we look at, does that make sense? I always like to, I don't like to just have targets. I like to be like, okay, well, does this make sense from a structural standpoint? When we look at the macro structure of this market, this actually does make sense, because I believe what's going to happen is that I don't think we're going to see pullbacks. I think it's going to be up only, and it's going to see parabolic blow off right into this zone here. This is going to most likely line up with the halving. It's going to trap so many people. It's going to be an irrational move to the upside. People are going to think, oh, we're going to get a new all-time high. Everyone gets girlfriends and Lambos and all that stuff. And ultimately what they get is they get cucked. They get slammed into this zone. Everyone buys because they're like, oh, you start seeing the sentiment flip on Twitter where people are saying, good luck getting, staying poor, all this stuff. And really what's going to happen is it's going to go here. And I think most likely what's going to happen is it's going to go into this zone and probably come back down and take out this low at some point. I think that was where your pivot.
Yearly pivot, yeah.
Yeah,
it's like 36, 37, something like that.
Yeah, so I think ultimately that makes the most sense. I mean, obviously I'm crystal balling the shit out of this, and I'm just like kind of pulling stuff out of my ass. But this, like, to me, this all makes sense. Like, and it, I've been day trading this by the skin of my teeth because of how volatile it was in this zone here. But what I'm noticing is that open interest is very high right now. I think Jack, I don't know if you showed it on stream, but you
No,
posted
I haven't pulled
our
up.
chat.
Let me show it really quick.
Yeah, go ahead.
Just so the audience can see. So this is the last year.
Wait, I think I have to stop. Yeah, you got it.
No, you're good. Yeah, I can just overlay it. But you can see open interest is the amount of margin positioning. It's not showing you, the breakdown of long or short or whatever. But you could see it was about 8 to 9 billion at the start of last year, and it is today cracked a new year and a half high. So it's as far as like bearish things to things to put on the checklist for the bears, that this to me is that. But I'm making a drastic assumption that a lot of that is longs, and maybe that's wrong.
Yeah, so I do think that that's incorrect because I've been watching this like a freaking hawk, and what I'm noticing is that on every move that walks its way up, on the lower time frames, the margin, the interest rate goes either flat or negative, which means that every time we see a move on these low time frames, people are shorting and hedging and then getting their asses blown out because this is a 15-minute 50 EMA.
That sounds painful.
It is not a fun time, right? And so what's happening is like you don't even see them having the opportunity to get out at break even. So they're getting dunked every move of the way, and people are hedging and shorting. And so what I think is going to happen ultimately is I think once we approach this upper boundary of the range, I think from here we see this irrationally impulsive move that just, liquidation cascade. And it's going to be volatile. It's going to trap a lot of people, probably see a big pullback and then bam, and then something like that. So, and this is supported, not only on the 4-hour time frame. If you want to like dumb it down a little bit, I'm always down for that. The daily Bollinger Bands, this is like textbook daily breakout. We see this perfect contraction, expansion of the Bollinger Bands, and then we see this attachment here, and it's just riding the bands in the daily, and it can do this indefinitely. It can do something like this. I believe we're somewhere here right now, and this is what's going to come next, is this huge move to the upside. And when we look at like
Are you calling for a god
trends,
candle?
yeah. Yeah, I am.
You heard it here first. The god
So
candle.
we can do this indefinitely, like just walk it up, walk it up, walk it up. I don't think we're at this stage in the market yet where it's going to just like be up only for months. But I do think this is an event where it's going to be like a really aggressive 20% move that traps a lot of late longs and then punishes them, a couple months later.
Can I ask you a B-Bands question on just with
Yeah.
what you have right there?
Yep.
You see how it contracted, it expanded, it contracted again, and so it's like its second expansion, I guess, within the range. Does that play in any way to what your expectations should be? Like, is the second breakout the real one, or something like that?
Yeah. So no, the short answer is no. And that's because every time you get a consolidation and a move, a consolidation and expansion, it's like everything in the Bollinger Band system is relative to the Bollinger Bands in that moment. And so this is like a new moment. This is a new moment. One thing to note though, just from like reactions to breakouts is, we saw this really clean breakout here. It rode the bands, right? It attempted to break out, got rejected. Attempted to break out, got rejected, and now we see this change of character here, where it tried to break out to the downside. The market said, no, we're not doing that. It came up, found support in the midline here, and now it's just clean sponsorship. So I love confluence like this, where I have a suspicion that the market is positioned a certain way from the Wyckoff perspective, and then my indicators just further support that. So, no, I don't think this has anything to do with what's going on here. This is like, you should view this in isolation.
Got it.
And the fact that it's strong, widespread candles attaching to here is, we see no supply showing up. Like it's not getting rejected or anything. So it all looks good to me.
It is getting a little on the daily. It's getting a little overbought for sure.
Yeah. But I don't think it's going to be something where it's like, oh,
like when you start to open a candle outside of the bands, that's when you know it's like you gotta be careful, right? Like that happens super rarely. Like there's one right
like
there in the middle. Yeah, exactly. That's typically the warning sign that look, this might not be bearish, but it is super overheated here.
Yeah, and something else that I've kind of noticed as well is there's this I don't know if this is bullshit or not, but here we are. So if you look at the Bollinger Band width, I've noticed, if you look at the Bollinger Band width, not the percent B, which is the positioning of the market relative to the Bollinger Bands, I've noticed you get divergent signals And this makes sense from like a traditional like 3 pushes to a high blow off perspective. Um, the 3 pushes to a high here led into our consolidation. And if once the market breaks this on the Bollinger Band width, I think that's the conditions of a new markup cycle. So
Yeah, you can definitely use that as a RSI for sure.
yeah.
A new markup cycle.
Yeah.
Well,
And
Mr. B Vance himself just tweeted out similar. Expect walking up the bands until divergence is detected. That's what he said.
Yes.
He did.
But yeah, anyway, that's all I got. So
I put
I'll stop sharing.
Bollinger's tweet up just for chat.
It's almost like he's listening.
John, come on, come join the show one day. Come on.
Did he just tweet it?
Yeah. Noon.
Just like a minute or two ago.
Is it me?
Yeah.
Yeah, it's you.
You're up.
I think this is the right screen, right?
Interest over time. That's what is showing.
So sorry to cut you off, but his pinned tweet is Bollinger Bands define high and low on a relative basis. By definition, prices are high at the upper band and low at the lower band. Okay. Yeah. So
yeah.
Huge insights there, John. Thank you.
Thank you, John.
Okay, we're gonna speed run like 20 things that are a mix of TA and news. Just to get a sense of like sentiment, where we're at in the cycle. Is anybody here? Does anybody care? So we'll start with Google Trends, which are just a rough estimate of just interest. Now you could argue this is going to have diminishing returns. Everybody already knows about Bitcoin. That's fair. But to see Google Trends actually crushing lows here as we're crushing highs, to me is super bullish.
Super bullish. Crazy. That means you're early.
Hey, so you're on the US there. Can you do global too? Just so we see.
Oh yeah, sure.
I'm just curious.
If for anyone not familiar, you can break this down by country, by whatever.
Man. That's even better. That's crazy.
So you can see how to the run up of the ETFs, we had, tons of media, tons of excitement. Everybody every day was talking about everything, like the SEC fucked up a bunch of times, right? Anyway, so this looks really good from greed versus fear. Like we are just super neutral. This makes it even more bullish because nobody's here yet, right? So I like what I see there. If we look at aggregated funding, Jack talked about open interest, but if we look at funding, aggregated funding, this is on Coinalyze, is elevated. It's
what is aggregated funding?
It's like all of the derivatives exchanges. I'd have to look at the exact Binance, BitMEX, Bybit, Huobi.
But it's not, it doesn't show you a bias one way or the other, right? It just shows you total funding.
Right. So it's total funding aggregated on average and then predicted. The TLDR here is, look, funding is elevated as you'd expect. Like we're basically going straight up here, but it's not like pre-ETF levels of insanity, right? You can see that on the chart. This funding ramp also acts as a cap typically on highs and lows, just because people are more apt to take profit or to close positions if they're just eating funding, right?
Yeah.
So it's this like time piece on top of your position where it's just eating away at your profits. So the good news is we're not seeing that here. Predicted funding is still quite low. So this tells me we look okay, right? It's not like turbo bullish, turbo bearish. It just says, look, we got room. There's plenty of room here. And if you dial this back to like, the bull market stuff.
Oh yeah.
That is you only see that when it's like crazy euphoria, right? We're nowhere close to this. So again, we're early in that respect. Looking at seasonality, which I know Jack talks a lot about too, I think, but looking at February seasonality coming into February, the expectation on average is around 10, 11, 12%. And what do you know? Like we're there. I know we're 9 days into February, but
that's funny.
But there was a seasonality piece to this on top of everything else. Now, the warning sign here is for March. You got to be careful because March typically isn't strong for Bitcoin. There's a bunch of macro reasons. March might get ugly. BTFP is closing. Reverse repo might be ending. The Fed might start to cut, which I don't think they're going to cut from a sign of strength. Sign of weakness. I think they're cutting from a place of strength. That meeting's on the 20th of March. And they're not slated to cut that meeting. currently. Okay, so that may change. But anyway, seasonality, we look good. We're on point there. Looking at the weekly cloud, over the past several months, we've just, made this trade slam dunk, much like Jack was calling for 48. The cloud said the trade entry is from 25 to 42. That's the meat of the trade. This doesn't happen every day. This happens once a cycle. Okay, this is a bullish reversal once a cycle. It doesn't happen this fast ever. Like, you can dial this back to history and see the other two versions of this. This was super quick. Obviously, the ETFs helped that. We fought off the head and shoulders at the bottom. We fought off another potential argument for diamond top, head and shoulders, right? All that was off the table, thankfully, because of the ETFs. As we sit here, 42, the top of the cloud, is still support. You can see there's a VPVR support at 42, VPVR resistance right about here at 47-ish. And then the next VPVR resistance, I'm just looking, it's volume at price versus volume per period. Anyway, the next one is at, is that 52 or is it 56? 57, whatever that is. You can see it on the chart. So there is a bit of a gap here as far as you'd read this on VPVR as a lack of volume interest or resistance on the top side, right? So based on the weekly cloud, we look good. We're above the weekly cloud. Weekly cloud not completely bullish yet. We're honestly like super overbought relative to the TK lines here on the weekly cloud. We don't typically see mega continuation beyond this. And if we do on the weekly, we typically get like a snapback, right? So Jack's talking about 36, I think you said.
Yeah.
I don't know if 36 is necessarily on the table here, but I think 42 for sure is a reasonable, like, let's say we go to 52 or 57 or whatever it is. I can see us going back to this range, basically, right? 42 to 48, completely on the table. I think it'd be tough to get lower than 40 at this point, but the weekly cloud likes how this is set up.
Isn't that crazy to say, by the way? I know I'm like kind of stepping in here, but to say that, like, that at the point of the market we're in right now, after going through FTX and like all the bear market and everything, like, that looking at these metrics, getting back below 40 will be very difficult. That blows my mind.
Well, the most bullish thing we had is money into the ecosystem. Prior to the ETFs, it's very hard to get real money in a big way into the ecosystem, right? So that's really the game changer here at the end of the day. We can also look at the on-chain UTXOs, and those match the VPVR. So this is on-chain data based on when coins were moved. And if you match that with price, here's that 42.5 level again. I don't know the look back period. This may be all-time historic. Could be. So 42.5, 47-ish, 57-ish. Those peaks in price movements on chain are much smaller, obviously, than 42.5. But again, this kind of says like these are the sensitive levels where people took interest for whatever reason, right? That's where they moved coins around historically. We can dig a little deeper, look at MVRV, which is market cap versus realized price. I just think of it as unrealized profit. When there's a ton of unrealized profit in the market, in the ecosystem, basically when the coins haven't moved and people are in profit to an insane degree, that's the top, okay? We've seen that every market top, including the last one. And as we sit here, we are basically in line with pre-halving periods as far as expectation on MVRV. And again, this is all just to say cycle-wise, we have a long ways to go, right? This is not looking overheated at all here. It looks fine. So another issue to think about. Got to talk about the rainbow chart for 5 seconds. Historically, log regression, whatever, Ben Collin talks about this idea that we drop down 2 bands, I think, every cycle. And you can see like the diminishing returns here, basically relative to the top of the band. And I think his argument is somewhere around the green band equivalent would basically be the market high. I think this market, this cycle is actually going to overperform because of all of the money that can get poured into this ecosystem. Like it's just getting started, So I'm not ready to like sell anything at some band in the middle here. You know, I think you're better off just waiting and seeing how this goes. Much like Jack, much like Schmitty on the daily, there were cloud warning signals for a breakdown here. We broke out at 28 for whatever reason, whether that's the fake Cointelegraph tweet, you know, whatever else people were unaware of, maybe their positioning relative to Bitcoin, they were under allocated. That kicked the party off, arguably, right? But since then, all was well until the bearish TK cross. That is the cloud signal to get out of your long, because you risk the downside, which in this case would have been 38, would have been 35. That's what everybody was sort of calling, right? I was in that chorus of people because the cloud was saying, look, this is potentially dangerous to stay in this thing. Thankfully, I guess if you're bullish, thankfully, we held above the cloud, and we're going to get this bullish TK recross with price above the cloud, which is the single most bullish thing in the cloud system. The single most bullish signal is exactly what's going to happen here, because it says you attempted to turn bearish and you didn't, right? It's a regain of momentum. This isn't a guarantee that we're going to have a God candle. It's just saying it's very suggestive of bullish continuation, right? No surprise there. If you look at the flip side, and Schmitty was also talking about this with the Wyckoff, the risk again was this stuff here, which was the top of the market in 2021. It was post-halving. That was the risk, but we avoided that, right? Maybe on another timeline, we're through the cloud here, but we're not on this timeline, thankfully. Again, we also had this mega inverted head and shoulders through GBTC outflows. We ate all those. Volume was declining, as Schmitty also highlighted. There were even more chart patterns in the right shoulder of this thing. 4-hour likes it, 8-hour cloud likes it, and we're in the target of that pattern. So it makes the most sense to me. I agree with Jack that we're going to start consolidating here, most likely. I like that as an idea, you know, some sort of markup phase type of pattern or whatever, right? This is the 8-hour. Again, we look good. We look really good. There's no denying that. And we just sort of have to fight through either via time or via some crazy market buy, right? This current resistance at around 47. This is the weekly B bands on 14 instead of 20. And it's also telling you, sorry, this is daily B bands.
This is daily.
Daily. Schmitty already talked about. We'll skip that. Just like the completely left curve measured move target for this would be 55 to 59. You're just measuring the range, projecting it higher. You can get more conservative if you just measure a tighter range here, but I mean, this is completely possible.
Nuts.
Right? Like we could consolidate from 47 to 49 or something. And then that's the target.
Have we ever, I don't think we've ever come close to the prior all-time high pre-halving.
No.
And that's kind of what this is, you know, demonstrating.
Yeah, this time would be different.
This
time would be different. Another trade I'm watching is Solana. Solana, it's probably hard to see on this, but Solana also has that bullish TK recross with price above cloud almost, right? Over the next couple of days, if it holds up here. It's also got a month-long inverted head and shoulders pattern. So I do like a local high retest at the very least for Solana once Bitcoin settles down. So assuming we settle down around 47 to 49, assuming we consolidate, and then alts probably get rotated into a little bit, right? That's where I'm at in my roadmap in my head. And then lastly, just some news items to pay attention to. Genesis and DCG and Barry are really going through it, have been going through it for a while. Genesis owes Gemini a bunch of money. Genesis wanted to sell a bunch of GBTC. I don't think that this actually got approved by the judge. Yesterday, I think I couldn't find the headline, but that's something to watch for because that will lead to outflows in GBTC. We also have this Hong Kong spot Bitcoin ETF that I think is due for a decision today, maybe, or it already happened. I don't actually know. I don't know how much of an effect that honestly has on the market, but it is another avenue for people in a failing stock market in China, right, to get money into Bitcoin. the ETFs quickly, yesterday was the highest inflow day since basically these things got listed, right? So that's super bullish. Again, GBTC outflow is basically going to zero. And then
Is
lastly,
that public data? The inflow
uh,
stuff?
so it is public data. I have to use BitMEX Research posts it every day. So thank you to Johnny over at BitMEX Research. There are a few other places you can get it, but that's the most reliable spot. And then lastly, we really have to thank Legacy for not blowing up. Okay. And I'm not going to explain this, but Truflation is projecting real-time inflation just getting crushed here. Okay. This is year over year. This is not purchasing power. Prices are not going down, but year over year inflation is getting crushed. And this has been highly accurate for the past like 2 years. Okay. So this is a really good sign that yes, the Fed is probably going to cut if they don't want real rates to remain extremely high. This is complex, complicated, but we got the Fed's balance sheet in blue. They're using QT. They're running the balance sheet down, okay, which normally liquidity out of the ecosystem would be bearish broadly, but we also have the reverse repo on the other side of that coin. Not going to explain it right now, but we are draining the reverse repo, and that's bringing liquidity back into the ecosystem, which is really helping risk. It's helping things like NVIDIA and Meta and tech and AI and all that stuff just blow up, right, in a good way. We also have DXY, which looked like it was going to break out, and this still can. You know, this is another thing that can cap our upside. It can allow us to consolidate. This still looks incredibly strong to me. DXY, this is just the US dollar index. It's above the daily cloud. It has a pattern. This looks incredible, right? Unfortunately.
Well,
so
and explain what happens if Dixie goes up or down. Or
yeah, so we want to be inversely correlated to this. We got lucky enough, again, like all the stars sort of aligned, that we had this pattern, we had a breakout, GBTC outflows diminished, and DXY kind of pooped out so far on the breakout, but it still looks very, very strong to me. And lastly, obviously NVIDIA, you have to watch this because if this rolls over, you know, this could break down 30% and it's back to 500 in a blink of an eye. I'm not bearish on it. I'm not saying you should short it. I'm just saying you need to pay attention to Legacy a little bit here because there are very few leaders right now. And if those leaders start to roll over, the indices are going to start to roll over. And obviously we had Meta, which is this insane parabolic move that looks like a shit coin, but it's a $1 billion company.
That's what tops always look like on the little altcoin DeFi coins and stuff, right? The big blow up, consolidate to the right, and then just drop down through everything.
So yeah, so we're on this like very specific timetable in my head. As long as Legacy's not rolling over completely, this could easily be like a low time frame inverted Adam and Eve or something, like, but it's got a little bit of time, right? And surprisingly, NVIDIA is still crushing highs somehow. I don't know who's buying at 700, but thank you. Did
you see that on the Pelosi tracker stuff? She added for NVIDIA, it was like what was it, 5 or 6 separate calls for hundreds of $1,000s. She was chasing that entire breakout, and she's up big, like $3 million. It's crazy.
We can all only dream to be as good of a trader as Nancy Pelosi.
I thought it was was it Paul Pelosi, right?
Well,
yeah. Sorry, that's true. Good comps.
Anyway, that's all I got. So that was quick, but yes, very bullish.
That was a good rundown. I hadn't seen a lot of the headlines and stuff.
Thanks, guys.
Well, I'm still processing all that. So
I guess the ultimate question is like, where can the bulls be wrong? Because this is something I asked you on Twitter a couple days ago, Jack, about your bearish Wyckoff call. I think the bulls are wrong if we break 40. What is the daily Kijun? 43, right? If we retrace and lose all of this breakout and get into the cloud, then it's over. Okay, then we're gonna see 36 and 38, right? I'm not expecting that, but it's something to watch out for.
To me, any weakness here is it's a no-go for me.
And
like
keep going.
Like on the 4 hour specifically. If we lose this attachment, that's going to ultimately bleed to the daily, and that's going to be a breakout failure. So I know I kind of sound like I'm memeing, but I genuinely do. If we don't God candle out of here, that's concerning to me.
And then I'm going to put my screen up real quick just to say,
sorry.
You're good. I'm basically echoing what y'all are saying. Like from from the view I've had, you know, on this market, if we find ourselves back in the range, so we've broken out. This is a great breakout. This is the start of great things. But like y'all are saying, if we suddenly find ourselves back in here, it to me it's the inverse of like what happened back here. It's the same kind of thing over again. Now run it back, you know, target the low at first, and then maybe even like a break below.
It would make sense to me if, for some reason, the Fed probabilities lean more and more towards no cut, DXY strengthens, and GBTC outflows ramp up again. And that is probably the series of events to cap our upside, along with the potential of, like, you know, legacy tech stocks rolling over a little bit or whatever. Yeah. That's what I think we have to
That's
watch
the big thing for me. Is
legacy.
Exactly like what you were saying, was the markets SPY, you know, all these major indices, they're being propped up only by like a handful of companies. And, you know, maybe some news event happens and we see them take a sharp turn to the downside. I think that could be a liquidation event that bleeds over into other riskier assets, like obviously crypto. But in terms of trend, I mean, like, I think it looks healthy. Like it's aggressive, but it's like, you know, don't fear the reaper.
It's like the 28K breakout in a sense that on the cloud, it's that is the restart of a potential trend. It's no guarantee again that there's some like multi-month trend. It's just like, look, the conditions are such that we're bullish. Another thing to watch towards the end of the day, if the FDIC takes over New York Community Bank today, what the fallout from that's going to be, who's going to take over, who's going to buy the bank. It looks like they may survive, but I'm not honestly sure what's going on there. So, you know, weirdly, the worse things get, the better we are, because they're more likely to do something about it. They're more likely to inject liquidity. They're more likely to step in. So really what we want is, unfortunately, you know, mega blowups. That's what we want.
So we've got like 2 minutes. Give me, I'm going to put my screen on real quick just to say, I want y'all to weigh in. Let's start with you, Schmitty, and then we go to Josh. Why are the alts not popping off while Bitcoin's breaking up?
Because,
and I mean on the dollar equivalents as well, not even on the Bitcoin pair.
Yeah. So I meme about this a lot, but I posted this on Twitter, this GIF or GIF, whatever the fuck you want to call it, from There Will Be Blood, and it's Daniel Day-Lewis screaming, I drink your milkshake, because that's what Bitcoin does. Bitcoin is the end goal of large player crypto exposure, right? So it's the method in, it's the method out. When we see Bitcoin really showing strength, it pulls remaining liquidity and capital from the alts and allocates it to Bitcoin. And I think that's just what we're seeing right now. We're seeing an early stage Bitcoin breakout, and alts are getting their sponsorship get sucked dry. And I think it's literally just that simple.
Yeah, I think until rates come down, until liquidity comes back in a bigger way for alts, until you see stablecoin prints again, which we saw a little bit of in October, a little bit of over the past couple of weeks, but not to a big degree. Now that's where alts are going to see their liquidity injection. I said this for weeks leading up to the ETFs, but you know, does your alt have an ETF? No. Okay. So it's not going to see the inflows that Bitcoin's going to see. It's another reason why you'd expect everything to just wait for Bitcoin to run. I mean, look at ETH-BTC. It's down another 1.5% plus today.
Yeah.
They do have an ETF coming up, right? Or am I crazy? Did I misread that?
Yeah, I didn't mention that, but yes, ETH likely does have some ETF announcement in May, I think, but it's
it's
just
out
not
there.
the time.
Okay.
That's it's likely gets approved. Yes. There's a time and a place to bet on everything, and I don't think now is the right time for that trade for ETHUSD.
And according to NiceHash, the Bitcoin halving is 64 days away. So we have 2 months. 2 months to lock and load, boys and girls.
By the way, the miners, like if you think trading Bitcoin's insane, miners are up like 30% today. CleanSpark 30%.
Oh, their stocks.
That's crazy.
Yeah. WGMI is the basket if anybody's interested in that. Not a plug for them, but Mara was up 30% thereabouts yesterday. They're just such amplifiers to Bitcoin's price action that it's wild, right? Because that's a 6x above the 5% move that Bitcoin's seeing today.
Yeah,
insane.
I think within that 60 days, I think the first 30 days is just irrational buying, and we see some sort of double topping structure over the next, subsequent 30 days. So I'm really rubbing my crystal ball today, but that's what I'm seeing.
Yeah, I don't hate it. I don't hate it.
Interesting. Interesting. Well, guys, this has been great. Thank y'all for stopping by. Josh, thank you for pushing us to get this thing going.
We did it.
I hope you enjoyed. We did it. We actually did it. SCHMITTY, thanks for being here. Chat, hope you enjoyed. This is, I believe it's recorded and saved on YouTube, so you can link the little stream link or whatever if anybody wants to see it.
Twitch, you mean?
On both. So Twitter is what I meant to say, or X, or whatever you want guys want to call it. So X and Twitch both will save the recording, and I think one of my mods will probably put it on the Market Power Hour YouTube, and we'll put all that stuff out. So
we're also close to hitting 1 trillion on Bitcoin market cap.
Woo! What is the number for that? I wonder. If that's like right at 50K, that would be really interesting.
No, Nick Carter was posting it. It's like some weird. It's like 48 something.
Oh, it's not like a nice round number. Or anything.
No. It's sorry. Okay, it's 49.6. So
hey. Okay.
That's fully diluted. So I don't think we're actually there yet. Anyway, another random thing to think about.
So chat, keep buying. Keep this God candle going up. Otherwise, you're in for a lot of pain and no Lambos or girlfriends. But anyway, we'll catch you next time. Guys, thanks for being here. See you.
Bye.
See ya.